Welcome. In this video, can XCN coin go up 30x? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. The pennant formation, which has emerged in a striking manner on the chart, provides investors with strong and potentially directional signals from a technical analysis perspective. This formation has a unique structure, resembling a narrowing triangle, and typically indicates short-term consolidation periods. Shaped by a period of sideways or slightly downward price movement following a prior strong upward move, this pennant pattern essentially represents a phase where the market takes a brief pause to regroup and gather strength. During this time, the balance between buyers and sellers is reflected in a tightening price range, which eventually resolves with a breakout. In the scenario at hand, when the price reached the upper boundary of the pennant, its resistance level, it began to show persistent strength above this level after testing it multiple times, driven by strong buying pressure. In technical analysis, a breakout above the upper boundary of a pennant is typically seen as confirmation of a continued upward move. A noticeable increase in trading volume following the breakout further supports the view that the move is not just a temporary spike, but rather backed by solid buying interest. Therefore, when volume supports the breakout, it is often taken as a sign that the previous uptrend is likely to continue. Pennant formations are especially significant in uptrends, where they are considered continuation patterns. In other words, such formations indicate that the price is likely to maintain its existing upward momentum and potentially target new highs. The pole of the formation, the initial sharp price rise, is often used to estimate the target price after the breakout. Technical analysts typically add the length of this pole to the breakout point to project potential price target. The fact that the current price movements from the chart appear to follow this rule adds confidence in terms of adherence to technical analysis principles. The movement of price within the formation became particularly noteworthy after it touched the lower support line several times before reversing upward. These touches suggest the establishment of a reliable support level within the pennant. The price bouncing off this support and accelerating toward the upper boundary indicates that market participants view this support as valid and are eager to buy at that level. The post-breakout continuation of the price's upward movement reflects the natural result of increasing demand and decreasing supply. While sellers try to apply pressure at the resistance level during the pennant formation, the fact that buyers absorb this selling and are willing to purchase at higher prices becomes the main driving force behind further price increases. In such cases, the broken resistance level now becomes a support level, and the price staying above this level sets the stage for a new upward wave. The upward price movement following the breakout also creates a sense of psychological confidence, not just technical confirmation. Seeing this breakout, investors may rush to buy due to FOMO, fear of missing out, which can push prices even higher. Additionally, stop-loss orders being triggered on the upside during such breakouts can lead to sudden spikes in volume, driving sharp price rallies. Considering the price action within the pennant formation, its symmetrical and technically sound structure is evident. The narrowing price range, increasing compression, and volume-supported breakout afterward are textbook examples. Breakouts from such well-formed patterns are generally considered more reliable by investors. Historical data also shows that similar pennant breakouts had often led to strong rally movements. Moreover, the fact that the price entered a new uptrend after breaking out of the pennant supports the trend continuation. In technical analysis, trading in the direction of the prevailing trend is one of the fundamental strategies. In this context, investors may interpret the breakout as the beginning of a new bullish trend. This increases buying appetite and gives the price upward momentum. Overall, the structure of the pennant formation and the nature of the breakout indicate that market sentiment is shifting positively and that investor expectations for the future are optimistic. Especially with new investors entering the market after the breakout above resistance, sustained buying pressure can follow. This may even result in prices exceeding the projected targets of the formation. In such a technical setup, investors typically follow this strategy. A position is opened at the breakout point, a target price is projected based on the pole length, and a stop loss is placed at the broken resistance level, which is now turned into support. This strategy aligns with the principles of technical analysis and represents a balanced approach in terms of risk management. In conclusion, reliable technical patterns like the pennant formation, along with volume-supported price movements following a breakout, offer investors strong opportunities in the direction of the trend. The breakout above the pennant is not just a technical signal, but also a strong indication that market sentiment has turned positive and that buyers have taken control. Therefore, this breakout can be interpreted not just as a short-term spike, but as the beginning of a longer-term uptrend. The alignment of technical indicators, price structure, and market psychology suggests that the current setup presents a strong opportunity for investors. But we cannot rely solely on the formation for decision-making. Let's take a look at other metrics as well. Stay tuned.
When we carefully examine the chart, we can see that the price movements have formed an upward structure along a specific slope. This structure is known in technical analysis as a rising curve formation, which frequently appears and provides highly valuable insights into the overall direction of the market. This formation gradually curves upward over time and acts like a dynamic support line, offering a crucial structure that guides the price direction. Unlike traditional straight trend lines, such curved patterns reflect not only the market's direction, but also changes in momentum more clearly. The fact that price continues to move in parallel with this curve, making consistent contacts at certain points, indicates that the uptrend is continuing in a steady manner. The presence of such a curve gives investors the opportunity to analyze the current market momentum more accurately. Curve structures carry significant technical clues that show how the strength of the trend changes over time. Compared to a straight trend line, this curve is more flexible and better reflects market psychology, which makes it much more reliable. The price consistently touching this curve and then responding with upward movements can be considered confirmation of a strong bullish trend. These touches provide valuable signals for investors both in terms of entry points and momentum assessment. If the price continues upward after receiving support from the curve, it suggests that the uptrend is continuing in a healthy manner. In addition, the visual structure formed by such a curve in technical analysis often evolves into strong psychological support zones, reinforced by the collective perception of market participants over time. As long as the price remains faithful to this curve, meaning it doesn't deviate below, it's clear that the trend is progressing healthily and that buyers are continuing to support the market upward. Each time the price bounces from this curve, it shows that investors are not allowing sustained declines below it and that every dip is seen as a buying opportunity. These types of curves often provide a kind of time-space harmony in price movements, making them solid structures for both short and long-term analysis. The direction and steepness of the curve help us understand whether momentum is increasing. A steeper curve indicates accelerating upward movement and more aggressive buyers. If the curve is more gradual, it represents a steadier rise. In either case, the key factor is the relationship between price and the curve. The curve acts like a magnetic field, keeping the price close to it, and even when there's a deviation, the price tends to revert back toward the structure. More importantly, every point of contact along this rising curve is considered a reaction zone in technical analysis. As price continues to make contact with the curve, confidence in the market increases and technically validated entry levels emerge for new investors. This creates a self-sustaining cycle in the market, spreading the upward movement across a broader base. This shows that prices are grounded not only technically, but also psychologically. The continued upward direction of the curve clearly indicates an overall bullish trend, and as long as this structure is preserved, the price is expected to continue following this path. If the price occasionally makes sharp upward moves within the structure, it can be said that the curve is functioning not just as a trend support curve, but also as a platform for rallies. The interaction between price and this curve also reflects the conviction of investors in the market. If breakouts occur along the curve, the price may move toward new highs, and as long as each pullback finds support along the curve, the upward move maintains a healthy structure. Investors closely monitoring this curve can analyze the price's behavior as it moves away from or returns to the curve, helping them to develop both entry-exit strategies and anticipate potential reversal zones in the market. This provides a kind of advantage in technical analysis, as each convergence of price with the curve can be seen as a decision point. Either the price bounces again and the uptrend continues, or a breakdown below the curve signals the start of a deeper correction. However, in the current chart setup, the price continues to respect the curve, and each touch is followed by upward movement. In conclusion, this rising curve is a highly critical structure from both a technical and psychological standpoint. The fact that price movements follow this curve as a kind of roadmap indicates that the uptrend is strengthening and that market participants are embracing this structure. The price movement along the curve presents a very positive picture for investors. As of now, the price's adherence to this curve remains intact, and the upward reactions following each contact confirm that the market sees this curve as strong support. If this curve is maintained, the likelihood of the price advancing to higher levels is strong, and it is considered an important technical element supporting continued positive expectations among investors. The direction, slope, and relationship of the curve with price should be closely monitored, as this structure holds crucial clues about the future direction of the price.
One of the key structures that stands out on the chart is that the price had previously consolidated for an extended period within a horizontal range. This sideways movement indicates investor indecision or that a temporary balance between buyers and sellers was established in the market. Such sideways phases, especially when accompanied by low volatility, are often precursors to massive price movements. This is because market participants prefer to wait at a certain level and observe conditions before making the next move. The price moving back and forth within a narrow range essentially means that large investors are preparing their positions, and the energy accumulating in the market lays the groundwork for potentially large future moves. Sudden price increases, supported by rising volume following these types of sideways periods, are commonly referred to as breakouts and are considered very strong signals in technical analysis. Looking back, it's clearly seen that right after this horizontal movement, the price exploded sharply upward, showing a strong and notable increase. This type of breakout typically raises expectations among investors that a new bullish trend is beginning and brings fresh buying interest into the market. Additionally, such movements boost confidence among technical traders, which creates further buying pressure. Especially when the price breaks upward after a long period of tight consolidation, it often indicates that the targets may go beyond classical formation projections. This is because market psychology triggers a process where the price is believed to be entering a new balance zone, buyers become more dominant, and sellers decide to hold their assets with the expectation that prices will go even higher. In such a scenario, new buyers entering the market increase demand, which in turn accelerates the price's momentum upward. Looking at the current price structure, it's hard to ignore the possibility that a similar pattern of horizontal consolidation followed by a strong breakout could occur again. The chart shows that the price is once again moving within a similar horizontal channel. The price is fluctuating within a limited range and appears to be preparing for a significant breakout. These types of structures are often interpreted in technical analysis as an accumulation phase. During this period, large investors and market makers gradually increase their positions without manipulating the price. While most investors grow bored and exit their positions during these sideways periods, those who are patient and believe in technical analysis may find these phases to offer high profit potential. Considering the previous similar setup, the possibility of another strong upward move appears to be a solid scenario. This new horizontal consolidation phase shares strong similarities with the previous one. Volume has decreased, the price is oscillating within a defined channel, and no clear direction has been chosen yet. However, based on historical patterns and in line with technical analysis principles, it is anticipated that a breakout to the upside is highly likely, and this breakout could be as impressive as the previous one. The fact that the price is frequently testing the upper band of this horizontal channel serves as a strong signal that buyers are becoming more dominant. This shows that sellers are gradually exiting the market and that the price is challenging the upward resistance. In such a scenario, technical analysts often emphasize the strong probability of an upward breakout. If this scenario plays out and the price breaks above the current horizontal range, a surge similar to the previous rally could lead to a potential 30x price increase. Such a rise would depend not only on the technical structure, but also on the overall market momentum, the continuity of buying pressure, and the intensity of investor interest. If a rally matching the previous price movement, the price would have the potential to increase by approximately 30 times from its current level. This scenario could be particularly appealing to investors with a high risk tolerance. Such opportunities are rare in the crypto markets and can provide substantial gains for those who recognize and act on them in a timely manner. In conclusion, there are striking parallels between the current technical structure and previous price behavior. Just as in the past, the price now appears to be moving through a similar sideways phase. If this structure resolves in a similar manner, and the price breaks strongly upward from this narrow range, a 30x price increase appears technically possible. Of course, such large upward moves also carry certain risks, but considering the technical validity of the formation, its alignment with historical behavior and market psychology, this scenario can be viewed as a reasonable and promising possibility. What matters for investors is to properly analyze such patterns, follow opportunities with discipline, and seize the potential offered by the market in a timely way. When approached in this manner, it can be said with confidence that a 30x increase as a result of the current technical formation is no longer just a dream, but a realistic possibility. However, we must be patient. When the price is moving sideways, investors tend to get frustrated.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon!